2025 tax updates, key adjustments you can't afford to miss. The IRS has announced a series of tax adjustments, and we're here to break them down for you. For starters, they are inflation-adjusted tax brackets. The top tax rate is still 37% for individual taxpayers, with incomes over $626,350. However, there are a few new rates. The key change here is for married couples filing jointly. The 12% bracket now applies to income up to $96,950. Meanwhile, the 22% bracket spans from $96,950 to $206,700. Next up, there are changes to the standard deduction amount. It's been increased to $15,000 for single filers and $30,000 for married couples filing jointly. This impacts whether you take the standard deduction or itemized expenses instead. With this increase, you might see a larger reduction in your taxable income without itemizing. But if you have high deductible expenses, like medical costs and mortgage interests, itemizing could still save you more. There have also been adjustments to tax credits for electric vehicles. A $7,500 maximum credit will be available for new electric vehicles, with extra credits for up to $4,000 for used EVs. But until 2027, eligibility depends on your vehicle's manufacturing location. So while credits are more accessible, you must source your EV in the US. Another change is that retirement contribution limits have increased. The annual limit for 401k plans have been pushed up to $23,000. And if you're 50 or older, you can add an extra $7,500 as a catch-up contribution. Simple plans and SEP IRA contribution limits have also increased. They are now $16,500 and $70,000 respectively. Note that there have been changes to charitable giving incentives. Qualified charitable distributions from IRAs have increased to $108,000. One-time donation limits to charitable remainder trusts or gift annuities have also increased. Now, let's talk about the gift tax exclusion increase. This has gone up to $19,000. At the same time, the lifetime estate and gift tax exemption has also gone up. It is now $13.99 million per person, or $27.98 million for married couples filing jointly. And finally, if you invest in real estate, don't forget about the depreciation changes. By 2027, bonus depreciation will be totally eliminated. So, you'll have to make the most out of cost segregation studies. These allow you to speed up depreciation by reclassifying components of your property with shorter depreciation schedules. All of these changes are easy enough to adapt to with an effective tax strategy in place. Tax experts like the team at Fusion CPA can offer you professional advice to unlock the full benefits of your tax returns. If you're in doubt, schedule a call with one of our tax pros.